So welcome guys to another one of my videos. Today I want to talk to you about my daily range model, okay, that I have on NASDAQ, US30, and just basically US indices that I use. So I'm going to share with you NASDAQ or NQ, it's going to be the same, doesn't really matter. On this day, I traded myself US30, which was a mistake, but NQ would have definitely been the right option to trade, but I traded NQ, and NQ just gave a quick, fast delivery, and I'm gonna show you what I mean. I shared the exact post on X for people to see because I believe that it's definitely gonna help a lot of people out there to come up with their own models to trade. And if you're gonna pay attention, you're gonna see that these things are actually repeating themselves consistently, and you can really make, just a model for yourself if you just put in a little bit of work as the time is going on. And for those of you that are actually experienced, I think, that you should be able to grasp these things fairly damn quick. So without further ado, let's begin. So as I said, we're looking at NASDAQ, we're looking at NAS 100. This is CFD, but it doesn't really matter. CFD or futures, the same pretty much data, and you'll be able to come up with, you'll be able to apply this to your, futures or CFD, doesn't really matter. So I want you to pay attention to this 6 o'clock on Thursday, the 19th of March. We've got this candle right here, and then the candle before it is 4 o'clock New York time, which is the close of Thursday's price action. So the way I look at it is that whenever we have 6 p.m., we have a new daily candle range form beginning, right? Whenever I see 6 p.m. New York time, I treat this as a new day opening candle. So to me, this is a new day, okay? Whenever this candle starts printing itself, this to me is a new day. So keeping that in mind, this is really important to keep in mind. And if you have a look, we have a gap there. This gap is a new day opening gap. So whenever you see between the close and the open, between these two candles, if you have a gap, that's a new day opening gap. It's the same thing with a new week opening gap, but you have to look at it from Friday's close to Sunday's open. I'm not going to go into new week opening gaps on this video, but I will go into, just a simple daily model that you can look at and consider for yourself in making, your own kind of approach or way of trading. So this white box right here is the London and the Asia range, right? So obviously first we have the open, then we have the Asian range, and then we've got the London kill zone, which begins right around here. So London kill zone is, between the 2 and 3 a.m. in the morning of New York time. This is extremely important that you understand that everything is in New York time. So we see Asia building on Friday overnight, and I don't really, I obviously don't do anything here. I just simply wait. Especially that Thursday's price action was just so horrible. It was trash. It was trash, but it still delivered. As bad of a price action we had on Thursday, I actually did manage on one of my accounts to place a trade, which was in this hourly gap right there. It was triggered. It was triggered at 11 a.m. New York time, right there when price came into it and rejected. And then we had a new daily range start beginning to form right here. So we've got the Asia range. It's building up, nothing major. What's really important to consider and look at on this day is that, and the main lesson that I kind of want you to take in is that, Asia is building. And if you have a look at Asia, they're relatively like smooth highs. If you have a look from that perspective. And then London as well. You see London? You see the 2 a.m. So this is London kill zone right there. So we have the London kill zone between 2 and 3 a.m. And as you can see, London kill zone doesn't actually, even take the Asia range. And we're just simply respecting this hourly gap right there that's in the premium. You see that? We're simply respecting this hourly premium PD array. And the price is just not willing to go any higher anymore. So then we've got the London displacement, which is right here at 5 a.m. New York local time. What I want you to take note is this displacement right here that we've got on NQ. So keep in mind, this is, if you imagine a daily candle to form, it's like it opens here, right? And then it kind of like goes up and then it keeps going down. Usually it doesn't happen that way. Usually Asia is left for manipulation. So like London would come and London would manipulate Asian range, or New York would manipulate the Asian and London range. But in this case, we had Asia and London just smoothly leaving those highs and just going down. And the main thing for me to consider was this right here, this hourly gap right here. If you go into 30 minutes, you'll see that we have two more gaps, you see? So now we have a gap here and another gap right here. So if you're a seller, you want to be selling in the premium. How would you get your premium? You go from the high to the low. You look for the equilibrium, which is the midpoint right there. And anything above the equilibrium is premium. So if you want to be selling, ideally you want to be selling above the midpoint, which is right there. So you see this 30-minute gap, and we have an hourly gap that makes these two 30-minute gaps. So for me, if you have a look here, 9 a.m. in the morning, right? So, I knew we had these kind of smooth highs, but I knew that we also had this inefficiency that was created, which was a major inefficiency to consider post the Asian and London range. So I was looking at this inefficiency and I don't just instantly think that this is going to be inversed, especially considering that we had relatively equal lows right here. So as you can see, as this gap is formed between 4, 5, 6 a.m. in the morning, we've got these 7 and 8 a.m. candles, which is followed by the 9 a.m. candle, which just drops, right? But if you have a look within this hourly gap, we have this 30-minute gap, which becomes the simple OTE setup. That's it. That's all there is really, guys. And then obviously the clear drawn liquidity, which is these equal lows. And then we had a 4-hour gap here as well that we had to break. We also had this low right here. And as you can see, we've got the sweep and then price just came into it and closed here. So I wouldn't be surprised if, the market is going to open up with a gap higher up. So that could be our new week opening gap. We'll just have to wait and see. But yeah, this was, definitely interested. I shared all of this analysis in advance. So you can go and have a look on Telegram or Discord for yourself to see, if you don't believe me, that I actually shared all of this in advance. And I actually took a trade. But I took a trade based on US30, not on NASDAQ. This is actually important to realize. But I just wanted to show you guys the idea of the Asia and London range being left there untouched and how important the gap is post the London session that it creates. And then how the price would just simply respect it and just go lower. And if you took an entry here from the 30-minute, that would have been a sniper. I said there's a potential entry right here that you could take. And if you took that, that would have been a sniper. So yeah, that was the whole idea. I just want you to keep in mind the idea of, what London does and how that plays into New York. Sometimes these hourly gaps will become inversion gaps. So that's also important to consider. It's not just, black and white. But that comes down to the structure. It would have been much more difficult to trade this day if the price, let's say, went lower and took all that sell side liquidity and then came back into it. But even then, I think because of the bearish momentum, it would have just simply continued lower. But it's definitely important to consider the daily objectives in the market. And my trade on US30 was extremely simple. The whole idea was just this pretty much the same chart as on NQ, as you can see, an hourly gap right there. And Asia range and London range was right there, followed by the hourly gap, followed by the 30-minute 2 gaps. And the most premium one is what's gonna give you the most ideal entry. And then yeah, it just collapses. So imagine if you got an entry here. That's hundreds and hundreds of pips. This is giving you an opportunity to make some serious money. So yeah, that's it for today. Just really wanted to share this Friday analysis, which was clean. And these things are repeating themselves over and over and over and over and over again. So yeah, I'm looking forward to just keep updating you with the same ideas, and eventually you'll see that these things are just repeating themselves consistently. And then we have this hourly gap as well here, you see. So this is something to watch out for. I think the idea could be that we're gonna open up this week, go into this hourly gap, and then simply collapse once again. That is actually very, very probabilistic, but you know, I don't really care what the market is gonna do that far into the future. I just simply adapt on the day based on the daily profile that I see. It's really that simple. Daily profile, daily range. You can make a model of, you know, out of any of this. It's really not, you know, rocket science. So yeah, that's it for today. We will be back with another video, hopefully during the week. And have a good trading week, all of yous. Peace.